But let's talk about taboo days. Taboo days are days where I teach the new students, the folks that just come to me. They usually have no experience at all in trading, or they're very inexperienced, or they have tried to trade with live money before they were ready, and they tried to trade these very days, non-farm payroll Fridays, FOMC days, CPI days, things like that. I try to encourage students to avoid those days because, let's face it, if you want to go out there and want to play Russian roulette, those are the days that'll end you real quick. If you don't know what you're doing, you don't want to use a stop loss, you don't know when to stop if you're doing it wrong, those days will absolutely wipe you out. And I can tell you from firsthand experience, I've done that to myself when I was 20 years old. It was very easy and efficient for me to blow an account on any one of these types of days. And that's the reality of it. I know mentors and teachers and people out there in social media like to pretend that they're the GOAT and they can do this and do that. But I'm always constantly reminding you that you see a lot of time and energy and effort and study today. But I wasn't like that in the beginning. And I fell victim to these types of days. So I try to teach the students that are coming to me or that listen to my lectures or whatnot to, hopefully avoid those mistakes, because it's easy to get lulled into thinking that these big market drivers are going to create that winning opportunity for you that'll put you over, give you that really big win. And the problem with these types of days, because of the magnitude and the volatility that it presents, it's a huge enticement to either trade without a stop loss because you think you're going to be right and you just have to weather that uncertainty initially, or you refuse to believe that you're wrong and you keep pushing and you keep pushing and you keep pushing. And that was usually what happened to me when I was a younger man. I would get in there and try to force my will, force my opinion on the marketplace versus understanding what it's doing. What is it telling me? And having something to go in with a model or an approach to capitalize on that future movement. And most of it was liquidity and time of day. And I didn't learn those lessons right away. I mean, no one sat down and said, "Hey, Michael, I've been watching you blow these accounts. let's help you out here." That didn't happen. No one was my mentor sitting next to me, like going to a classroom or anything like that. So I had very painful lessons. So when I hear other people say and parrot part of what I said, but out of context, yes, primarily I try to teach my students that are brand new to stay away from non-farm payroll, because that initial excitement at 8:30 when it releases, you don't know which side they're going to run for first. I don't always know that. Sometimes I do. I have an inkling, but sometimes I don't. So I have to wait for that initial run. But after the first half an hour is done, I can sit there and trade it the rest of the entirety of the day if it's going to move around. But one of the strengths of not taking that initial run or trying to trade ahead of it, in other words, being in a position before 8:30 on non-farm payroll, is knowing that I will see where the liquidity is and whatever existing inefficiencies are left in the wake of that initial surge that non-farm payroll or FOMC creates. See, that's the overwhelming confidence factor, the arrogance that sometimes comes across to some people that are listening to me. It's not arrogance. It's absolute assurity that I know what I'm looking for. And if it's not clear in the chart, if I don't have something that I can show you that I've already taught with the language I've presented to you, then I'm not going to have anything to share with you. But generally, after the initial shockwave of whatever these news drivers are, I can go in there and tap dance and moonwalk out the door with something to show you as an example. Say, here's what you can do with this. And so it's an encouragement, not for the new traders. It's not for the folks that are just now sitting down and still wondering what video to watch because they're brand new. You should not be trying to trade these days if you're like that. If you're a new trader and you're less than 6 months experience with using my content, you shouldn't even consider those days. You don't know enough. You don't know enough about yourself. You don't know enough about the things that's going to lead to your ruin. And it's not my concepts that'll cause your ruin. It'll be your impatience or your insatiable desire to get out there and just do something, because doing something feels productive, and back testing and studying doesn't feel productive. For a long time, you'll feel that way until you get to that point where you know what you're looking for. And even after the initial surge of these types of report days, the visibility becomes perfectly clear. You know exactly what you're looking for. And when it materializes in the chart, you've already anticipated it. You're not reacting to it, you're anticipating it. And that's a level of confidence that really can't be articulated. And I always ask my students all the time, what does it feel like? Once you get to that point, what does it feel like? And it's interesting to always hear their response. And they still, they understand what I mean by saying it's hard to articulate it, because the words don't reach far enough to give you that. It's like a superpower. Like, you really understand yourself, you understand your model, and you know that you're not going to fall victim to the retail pitfalls and snares that I did as a young man, and the majority of everyone else out there that aren't aware of how markets book price. So for clarity and for the record, you absolutely can trade the non-farm payroll Friday, but it can't be ahead of the report, and you should not try to do it until you have experience. That's all. That's all I'm saying. I want you to learn how to walk before you run. In those markets, they're fast. They can move extremely quick to a liquidity pool or an inefficiency or whipsaw you real fast. And you need to be able to know, okay, this is not one of those days where I want to be a participant in. You get burned one time, stop. It's not worth going back in. If you make a win and it's nice, stop. Be content with that. Don't get wrapped up into trying to prove yourself when you have these clowns on the internet that talk nonsense. And then you got to feel like you got to go out there and slap the market around just to show them that they're nobodies, they're insignificant pissants. You don't need to do that. Trading is for you to make more money and change your lifestyle, not to impress people that you can't like or find an affinity for, because that's what social media is. It's a big cesspool of assholes and idiots. FOMC, you can absolutely trade those days, but it's better for you not to trade the morning session. And I teach this to my private mentorship students. They know this like the back of their hand. And now that you have the core content lessons on the YouTube channel, you'll hear me talk about that there as well. So I'm not holding that from you. It's been something I've been publicly stating all the time. The morning session of FOMC tends to be quiet or lackluster. And sometimes it will move, and that's the times when hindsight Harry comes back and says, look at this. This is what the day the ICT doesn't tell you to trade, but look what I did. But you don't have any record of them telling you what was going to happen beforehand. And so it's, again, pointless. It's only meant to justify their insecurities and also to deter you from studying. Everybody that's making money with my content had that same struggling point. Listening to outside interference, doubts, hecklers, things like that. And you have to tune that stuff out. So while I do say majority of the time Mondays should be left alone, when should you trade Mondays? Ooh, we're getting to the nitty gritty, are we? Well, if we have a news driver like non-farm payroll Friday, and we don't have a holiday, unlike this particular week here, we just celebrated the Independence Day in the United States this past Tuesday. And that can create rather lackluster events in the beginning of the month. In the beginning of the week. And that's why I said that the best trades will be on the latter end of this week, even though it's non-farm payroll. Usually the protocol that I teach my students to follow is non-farm payroll Fridays. You need to be done trading by Wednesday morning session. Take no new positions. If you're new, you do not do any new positions. Now, obviously, you can see I slapped the shit out of the markets this week on both Thursday and Friday. So it's not to say that you can't do it. I'm just stating as a mentor that it's advantageous for you to remove yourself from the potential risk, because they can be rather aggressive. And you don't know yourself well enough yet. If you're brand new and less than 6 months experience, you don't know the tendencies that you're going to bring into those volatile days. Because it's real easy to think, I think this is going to tear off and do, 100 pips in the pound dollar. I believe it's going to go 200 handles in the NASDAQ. And I want to be a part of that. It's real easy to talk yourself into that. And left to your own devices, you're going to go in there and do that. And probably going to hurt yourself. And then regret and scar tissue forms. And now you're afraid to take trades. Or you're going to blow the account and then walk away thinking that nobody makes money in ICTs are fraud. So I do it for your protection. Okay. And my students know, my long-term students know that we absolutely have ways to go in there and fleece those markets on those days. But it's important for you to hear these things from me early on and many times by repetition, because you see what my students are doing with real money. They're smashing it. And you see what I'm able to teach in advance, show you before it happens, and then execute with precision. So when you see those things, it's natural. It's a human nature to want to gravitate towards that, because you view that as success. You view that as what you want to do. You want to be able to do that. And if you just read the tweets and comment sections, that are still available, and the ones I just showed from yesterday's NASDAQ PM session trading on YouTube that I put up, they're live executions, folks. I mean, it's what it is. You can't hide it. It's there. And for people that says I can't trade or it doesn't work, show me something better. What did you make on Friday? What did you do? What was your executions? Did you lose money? Did you make money? How much money did you make? So I'm having this discussion today because I want to tie up all these loose ends before we get to November, because there's a lot of nonsense that's spread around smart money concepts, ICT, me specifically, and what can't be done, what shouldn't be done, what I said, what I didn't say. And Mondays, you should try to trade Mondays on a week like non-farm payroll. When there is no other holiday in the beginning of the week or prior to Wednesday, if there's a holiday in there, refrain from it. Expect more movement in the non-farm payroll event and Thursday ahead of it. Look what happened this week. That is a very specific characteristic of that calendar. If there's ever a holiday, during the week, Wednesday, Tuesday, or Monday of non-farm payroll, Thursday and Friday of that week will be absolutely bonkers. It will be moving around really nice. You'll have a lot of movement. Therefore, you'll have lots of opportunity to go in and find something, especially on a lower time frame chart. There's plenty of setups to be able to do whatever you're looking for. When should you not trade Mondays? You don't want to trade Mondays on a normal non-farm payroll Friday. Or did I say that right? I just think, I don't know. I can't go back and so I'm talking to you live. You do want to trade Mondays on non-farm payroll Fridays when they're normal, without a holiday. You do want to trade on Monday and Tuesday and be done by Wednesday. But if there is a holiday, Monday, Tuesday, or Wednesday of non-farm payroll Fridays, you do not trade on a Monday. Look to trade Thursday and Friday after non-farm payroll release. So obviously what fits good in that condition? Silver bullet, 10 o'clock to 11. You can do the macros that I'll talk about tomorrow. We're only going to teach the 950 to 1010 and 1050 to 1110 macros tomorrow, and we'll ease into the other ones. Okay. I want to teach those because I gave you examples of them. I actually did live executions with them, so you can see it. I'll be able to lean on those executions and talk about it in greater detail as to what I was using, what's going on during that time, and stop listening to these people out there that think they know my macro. They don't know. Okay. And I understand you may be overzealous. Okay. And maybe you love me. Maybe you love what I'm doing, and it's not mean spirited. You're not trying to be, deceiving, but stop trying to talk about something you don't know yet. Okay, because you're going to embarrass yourself, and it's just going to invite more people to troll you. And I'm not trying to have anybody get trolled. Even the people that troll me, I don't want anybody going over to anybody else's channel and talk shit to them because they're miserable. And I don't want any of my students that may be misguided in their pursuits to be significant online to be receiving trolls and harassment, that type of stuff, because it's wasted energy. You're not going to gain anything from it. And I want to go out here in November on a high note. So Mondays, we definitely look to trade. If there is an event, like for instance, FOMC. FOMC tends to be a Wednesday, Thursday event. Not always, but generally. So that means you want to be trading on Mondays that week. Try to find something early on. Don't force it. Don't insist upon, I have to trade Monday because ICT now said no. Be more willing to do so. But if there is a event like non-farm payroll and there's no holiday, Monday, Tuesday, or Wednesday, we definitely trade Mondays. That absolutely is a thing. But we can't trade on Monday if we have a non-farm payroll event or FOMC and there's a holiday that week on a Monday, Tuesday, or Wednesday. You don't trade the Monday because everybody's going to be using some kind of sentiment idea ahead of that big report. Large funds will be positioning themselves ahead of that. So it's not a lack of buying and selling interest right ahead of these reports. When brokerages are pulling the liquidity, nobody stops and says, you know what time it is? It's 8:29, it's 8:28, it's 8:27. Non-farm payroll's coming out. Let me get my orders out of there. Let me stop my trading. No. All the liquidity is stifled. That's at the broker level. That's what's really going on. So you can get mad about that and say, oh, those assholes had this. They don't want to incur risk. Big moves can happen, folks. For the folks that are listening to this and thinking, oh, that's bullshit, this guy doesn't know what he's talking about. Listen, that's exactly what's going on. And what do you think's happening when these big events like CPI come out? You get an email, it usually from a reputable broker. If you have one, they'll tell you margins have been increased. What are they doing? They're making it harder for you to over leverage, because even though they will pull the liquidity right ahead of the event, you can be positioned the night before during London. You could be positioned the day before. And that margin increase may affect a great percentage of the gamblers. So it's just a natural mechanism that brokers use. And if I had a brokerage firm, and I have no intention of ever having one, I would do those things too. It's good business practice. Why would you open yourself up? Would you go out there, in the streets when riots were going on, and run out there and say, hey, I dare somebody to stomp my ass right now? You wouldn't do that. Well, that's basically what a brokerage is doing if they let anybody go out there in these big events. Like, look at CPI, for instance. Okay. That's a taboo day. I tell you, don't trade ahead of it. Don't position yourself in front of CPI, because you do not know how they're going to use that data. They may send it in the direction you thought it was going to go in. And there's been many times where it makes perfect sense for it to go a specific direction using my ideas, my experience, and then it goes the other direction. And you watched me do that 2 times live.